Welcome back, traders and investors. It's time for Fari Tales. Fari Hamzei, Hamzei Analytics, giving his colorful and spirited outlook on the market. Here we are at all-time highs, 1886 and a quarter. We hit that yesterday. We hit it today. Fari, what are you looking for in the market ahead of the unemployment number tomorrow?
First of all, good morning, Joel. Pleasure to be with you again. It's going to be a quiet day today, obviously. We do have a webinar this afternoon, which different inputs come in on how we're going to be looking at the non-farm payroll for tomorrow. Generally speaking, I'll try to have first of all, we're at all-time high. This also makes it a little bit special. One of the guys I would look for to some analysis this afternoon after the close would be Jason Gopfert. By the way, it would be a great guest for you guys when you get a chance. I'll put you guys together.
Okay.
Out of Minneapolis. He does a lot of he won the MTA award in research. This would be an unusual situation, mainly because we always have a slow day before non-farm. But of course, now you're at all-time high. The volatility is crushed. If you look at I'm showing my desktop to those who joined. The link was in the chat room. We're not email harvesting. You can put anything you want as an email. It just takes you in there immediately. If you're looking at the chart right now, my chart right now, my desktop, you'll see what I'm looking at. We have a CI cross right now. The VIX are rotating down. We're in a -1 to -2 channel on VIX. So volatility it's getting more and more squashed. Now, does that make trading easy? No way. Yesterday, if you look at the charts yesterday, you'll see here. Let me blow this up and open it up. You'll see how we traded intraday. I suggest to everybody to have a reason to trade today, mainly because you really need to. If you trade index tomorrow, or if you want to put let's say option trade later on tonight before the close, ahead of non-farm, just a spec trade. Keep your bet size very small. Why? Because you don't want to get squashed mentally. The worst thing you can do today is get mentally out of sync. Because then tomorrow, if and when an opportunity arises, mentally you're done. You're cooked. You won't take advantage of it. This is crucial. So try to watch your bet size today. Try your reason your trade. If you have an excuse like a baseball game, go. Get out of the way, Don't touch it. What you need to be alert tomorrow. Now, where do I get my data? Different ways for tomorrow. I'd love to go to economic calendar from Bloomberg. That's a very widely piece of advice in terms of the consensus opinion they get. As of right now, we're looking at 175 to 275 for the consensus range. The consensus comes in at 206. The prior was 175. We don't have anything going on privates that would make a difference. I'm sorry, the government that would make a difference for privates. So I would concentrate on the headline number, the total non-farm. The other number I like to always look at is average work week. We seem to be around 34 and change, 34.2, 34.3. The range right now is 34.3, 34.5. I'd like to see that rising. Okay. If that's rising, that means that we're having employers have busy time. They're fully using what they have, and possibly if that ticks up, it's an opportunity to hire new people. Now remember, we do have a problem in here in the data. It's called Obamacare.
Okay.
Because
Explain that for us.
The differentiation between full-time versus part-time. A lot of employers, especially on the lower end of the income scale, they move these workers around. So the data may be a little bit getting less than fully clean as it used to be. So whatever that was, remember, these are big surveys. So, but that's something to think about. If we go to charts, here, let's go to, I'm going to my timer charts. By the way, these are posted on Twitter. Hunter Killer Sub is the Twitter handle, but you'll see the all-time line on top right there. coming in, and we punched through it yesterday, made a new all-time high. Volatility is very low. McClellan Offset is at 86 plus. Trust, Breath Trust is at 57%. We're at 65. I would be worried about. So we get into an area where I think the upside is somewhat limited. Keep in mind, we've had 3 very good days. The last 3 days, last 3 sessions have been pretty strong days, and following a doji reversal. Okay, and that followed outside bar reversal to the downside. So we came down to -2 sigma, and remember, this is like a music sheets. You got to read it, okay? And you see the levels changing. We're at +2 sigma. I would be surprised, let me put it this way, that tomorrow will close positive.
Okay,
the way the chart is telling me, to me, news fits the charts.
Okay.
There's a reason Obama comes to Rose Garden at a certain time. Trust me. Maybe Lloyd calls him and said, the guy who's doing God's work, blind fight. He's one of your people, right? He calls in and says, hey, Joel wants to do this. I see his account because you trade with Ready, right? Hey, Joel is doing this. Obama, get into Rose Garden. Say that. So, just kidding.
But
my point is, up there, we should be pulling back.
So you're kind of thinking that this 1886.25, which was the high from yesterday, it's also been the high in today's session. We may go sneak up there today and test it a little bit, but you wouldn't.
Not much. I mean, we're at the margin. We should be pulling back. Can we surprise big amount tomorrow? No, but I think we may go up a little bit. But net, we should pull back because sigma-wise, we're out of buyers almost for the time being. Remember, these are all relative. These positions are, these are vibration. We're measuring vibrations against itself, okay? So you have things open, these springs coiled or rubber band pulled. Right now, the rubber band is being pulled. And we're at 2 sigma. 2 sigma is 95% confidence interval.
Okay.
So we're there. This is all stats. We're almost there. We have a little bit more to go up.
Okay, and then on the downside here, let's say we get a disappointing number, which from the preliminary numbers that are coming out, it looks like we're going to get a decent number. But let's say we get a bad number here, and what would you be looking at?
I'd say 0 sig would be first stop. 0 sig on the cash is 1866. Okay. Again, I'm going by vibrations. It could be violated. I won't lose sleep over it, but at least I have a roadmap. Okay, I have what do you call it? Let's say it's like flying without instrument. Okay, you're flying VFR, visual flight rule. At least I have a tower or a mountain or a searchlight, something I could see up there and say, hey, that's I think where we're going to end up. Or are we going to be exactly that? Doesn't have to be, but at least I know how to change my bet size throughout the process. I won't be dumbfounded. I won't be a deer in the headlights kind of for a trader.
Okay, I noticed when right before the unemployment number, which is released tomorrow at 8:30, a lot of times I like to keep an eye on the open book for the S&Ps. And
right, you're looking at it like 2 minutes right before it?
Well, I look at it a couple minutes before, and you still have the players in there. You have people that are still trying to squeeze out a couple ticks. But at like 8:29:59, everyone pulls their markets, and it goes.
The orders vanish. Yes, you see the order book all of a sudden go from 4 digits to 3 digits, and possibly even 2 digits. Well, I haven't seen 2, but it'll go to 3 digits and it stops. Yes.
So are you waiting? Could you care less about the number?
I don't touch anything before the number.
Okay.
So I'm not betting on a number. I'm not a gambler.
Okay. So
I want the number. I'm a reaction guy. I get the number. I got my roadmap. Then I'll make an instantaneous decision what I should be doing. And I also like to see the first wave to go away, because usually the first wave is the head fake.
Okay. Okay, so then
remember, I've traded non-farm in the bond days. I used to trade bond futures off of it before even I traded S&Ps. So this is probably that's a key day that you want to trade. I mean, there are 2 key days if you trade in bonds versus S&Ps that are common. This and FOMC. Okay. The next one that's crucial is expiration, but you don't have expiration in the
No.
bonds like you do in S&P, right? So
Right.
those two crucial exercises have gone back with me some 20 years. And for me, those 2 days are my biggest days of the month. If I pay attention, that's why we have special rules. Right? Lights in the office go to amber, I get a tactical trigger out of the safe. I trade size tomorrow. I don't
Okay.
trade size today. I didn't trade size yesterday. That's why we have a special rules in our chat room. Anybody talks is out of the room.
Okay. And
Oh,
so,
yeah, because you got to pay attention. There's a 15, 20 minutes, Joel, you can make your month.
yeah, that's true.
There's no room for ambiguity. There's no, and I'm the flight leader. So as I post things there and talk, I cannot make mistakes because some yo-yo yanked me and said, "Hey, what happened here?" There's no time for what happened here. This stuff is coming. You see how they open the floodgates. We could have a 50 to 100,000 contract move in the first minute. Okay? So you got to be ready for a bunch of scenarios. That's why we always have our webinar the day before. Ashraf Loidy on currency, George Cavaligas on bonds, myself, Brad Sullivan. These are key traders coming in, looking at the market, giving us their scenarios. Today, we write down. I go over the webinar tonight one more time. So in the morning, in the morning you get up, get your sleep, have your shower and coffee ready. Go through your checklist. And then it's showtime. About 7:15, 7:20 Chicago time, we'll go to a lockdown period where we watch where we're going. We do not take a position before. We're not betting on a number. That's not our business.
Okay. And
These
then,
numbers are all over the place, and also they're manipulated at Washington. In my opinion, they're not good raw numbers. That's why we have so much. Even if it's not manipulated, there's error in there, observation error, statistics. That's why we have so many revisions. The fact that we have so many revisions tells you we're not in the business of guessing. What we need to do is get the number and then react. And maybe we have in between 30 to a minute, 30 seconds to a minute time. What is that? What is that? Those are the head fakes. Those are the guys who did bet, but the bet is wrong and trying to get out.
they're trying to get out. Correct. So would you?
Yeah.
So you see the number, you see the immediate reaction. Do you?
Uh-huh.
And then simultaneously, you have your levels ahead of time, and so in order to,
Oh, yeah.
you have your levels ahead of
Yeah,
time.
we have levels based on the number. We have also levels based on the price action.
Okay.
Already, I have 14 monitors here. I have different monitors ready. I don't even look up. They're sitting in front of me.
Okay, and then
Let's
so
say,
you'll
for example,
go.
Bloomberg levels, let me tell you the number, I have on one of the screen, just sitting there waiting. All I have to do is move my head.
Okay, and then so you'll go with a limit then, right? You'll go with like a limit to buy.
Oh, no, don't try limit tomorrow. If you want to trade limit tomorrow, this is not for you.
So
Because
you'll go
never-
market.
never-
So
your
you'll go
limit will never
market.
get killed. On a target, maybe, but not an entry. If you try to enter on limit, forget it. Probably you're not going to get filled. You got to do a lot of praying. I don't pray. Not
Okay.
even on Fridays.
Okay, so
And you got to go with market. You have to have the stomach for it. Look, I've had times. One day, I remember my fill was 3 or 4 handles. 3 to full S&P handles to get filled. But you got to have that stomach. If you're trading size, that number adds up real quick. But otherwise, you're not in. You're out. You try to pinpoint what that price is going to be in that crazy first, let's say, 2 to 5 minutes. It's very difficult. I urge you not to go in by a limit. Have the stomach to go with market. But on the exits, yes, limits are okay. Limits are okay. With some, prudence, with some judgment. Yeah. For example, new highs type of a deal, or a breakdown. You can use some limits. Look at what levels we were that were accepted yesterday, the day before, this week, kind of like on a market profile, to see what levels you're looking at that make sense. Look at your longer term, like the weekly support and resistance from another chart. Have them ready. Yes, you could put maybe some limits there, but tomorrow is not a good day to trade limits. Same thing with FOMC. Post FOMC communique, or when the Fed chair, this time now, Auntie Jeanette, has her press conference, you're trying to go with limits. I think you are limiting yourself being engaged. You probably get better prices, but you're not in the trade. There's a good chance you're sitting outside.
Bob Bright, who I traded, ran his Detroit office for a while. He used to
down in Vegas.
no, I ran the Detroit office for Bob for Bob and
Oh,
Don.
I see. Is that right? Yeah, I know Don Bright over there very
Yeah,
well.
and
In Vegas. Yeah.
Bob used to say, "Limit orders, limit profits."
Yeah. Well, it's true. It's true. In a lot of situations, true. And he's a great. Whole Bright trading firm is that tape readers. Okay, that's a very good observation. Yeah, I would
Okay.
agree.
Okay. So let's get into some individual issues here. You said my favorite stock, Twitter. Here. I don't know if you.
Hold on, let me bring the chart over. Okay,
I
now
don't
we're
know
looking
if
at Twitter. Go ahead. Go ahead,
I don't
sir.
know if you read my article. I believe it was last week, and I was just discussing how this was kind of like
No,
a.
I couldn't. You blocked me. Just kidding. Just kidding. Just kidding.
It was probably so many people trying to get on the site at the same time as you. But I was just kind of
Right.
saying that this was a was a replay of the IPO. IPO'd at $45, bounced around between 40 and 50, and then had this ridiculous move. And now you're coming back to this $45 level here. So
Right.
I was just saying, hey, if you felt like you missed the IPO and here's another opportunity to get in at the $45, roughly the $45 level. I mean, it's an ugly looking chart here. What do you?
Can I play a piece from Murray and Murray show?
Of course.
Murray, don't you want a discount? Why you want to buy it now? It's gonna be cheaper.
Okay. All right.
Have you looked at the daily chart with the Sigma channels? We're rotating down furthermore. We should be seeing new lows here.
Okay. Okay.
At least new 2014 lows. We're not there yet. Get a discount, Murray. Get a discount.
Okay. All right. Well, that's your take. I mean, is it something?
Yeah, if you look at it, you see a 20 and a 50 cross.
Yep.
We stayed below 20. We hit 3 sigma, we bounce, and we begin to rotate. All of these are telling me we'll at least put a new low for the year, for calendar year. Okay.
Yep.
Now they did trade in November. They came from public in November, right? Looks like November 7th.
Yep.
So and the low there, if I'm right,
38.
is 38.80.
Yep.
38.80. Is that right?
Yep. So you're
I
looking.
think we will go and challenge that.
Okay. I mean,
So if you want to buy $7 more, you have $7 more extra per share. Come on in.
The water's fine. Okay.
And if more people coming to buy here, maybe I'll get involved and short it a little bit. But I think chart-wise, structure-wise, we should be challenging $38.
Okay, there's your view on Twitter. Also, I'll just point out, I'm more of a pattern, double top, triple top, and boy, there's major resistance here at the 47.50 level, as you could, tell by looking at the charts from the highs of the last 4 days. So,
there's other thing here. I'm looking for volume.
Okay.
If this was the low, you should have a surge in volume. There's no volume here.
Good call. You
I
did.
want a baby with a bathwater. Okay, remember, I'm a Navy guy. Baby with a bathwater out of the torpedo tubes.
Okay. Yeah,
Okay?
you did get a
I
little
don't
bit
see
better
that yet.
volume. You got a good volume. I mean, you did have a heavy volume day when you spiked down to 43.31, but it wasn't it didn't blow your socks off.
Not as spectacular. You see the
Exactly.
spectacular volume we had on February 6th? That's what I want to see.
Okay, good.
I
Okay.
want a standout volume.
Okay, how are you playing this whole Google split?
What's it?
Google split here.
Oh, I have not studied it. I was coming in to set up the link for you guys to see my screen. I was setting that up. I heard you guys in the background. You had a gentleman, I think he's sitting in for Dennis.
Yes.
He was analyzing it. Interesting. I have not studied it. I have no idea. That's interesting. We need to look at. But I have a couple of my interns look at it. They'll come back to me with when I say interns, guys.
I agree too. I mean,
quite a bit. The other analysts come back to me what to look for. Don't know knowledge there. Let me not muddy the water.
Okay, let's just talk about some of the other momos here. Tesla,
Sure. What would you like?
Tesla came,
Tesla.
Yeah, I mean it's and this is the thing about the pre-market and the after-hours trading. It makes it tough because you had some nice highs at at the 216, 217 level. Kind of flirted with it on the first, but then you get the gap and go on yesterday up to the 238.
Yes.
I mean,
we were coming back. This here is what. Again, people on the desktop they're saying we came off with negative 2 sigma.
Okay.
We had passed through that only twice in this push down. One was on the 24th of March, which was 3 sigma. That's a big one. We immediately bounced off of that. Then on the 27th of March, 3 days later, we had another breach of negative 2 sigma and also 50 bar. Okay, I mixed sigma channels with long-term moving averages just to see where the support comes in, because some people trade volatility, some people trade moving averages, and you want to know this is a widely owned stock or traded. You want to see where they're going. Yesterday we had a gap up. I understand that we're down $1.13 in the pre-open, which is 0.5%. Now, but look at that shape, and down below, people who look at my desktop, they see the CI diffs and CIs, the rotation. We should be going up, and I would put my target about 255 right now.
Okay.
As a matter of fact, this morning we may go in there and take a look and maybe put collar spread or something on it.
Okay.
Now, in this stock, I urge you, please, don't be a hero. Don't try to do outright because it's cheaper or it's less contracts. This is the stock you have to trade collar spreads on. The volatility is too high. You have to sell some volatility in your trade. That means buy some on a long leg. On a short leg, you're selling some volatility.
Okay.
If you can find a diagonal, so much the better. That takes a little bit more time. Also, a little bit more acumen, because you have to really watch your volatilities.
Okay. All right, Fari. Well, we got the setups for tomorrow. We'll follow your scenario. Thanks for coming on. Thanks for sharing your charts with us, and we'll catch up with you again next week. Thank you, Fari.
We'll see you. Thanks.